possible to secure a $150,000 trading account in less than a week? 4 days ago, I bought a brand new 150K profit challenge. And only 4 days, I passed this with a profit of over $9,000. This wasn't a lucky streak. This was execution of one simple mechanical entry model. And this video, I'm putting back the curtains on this entire process. I'm going to give you the exact entry model I used, our risk management framework for the challenge, and the psychological approach required to execute flawlessly under pressure. To do that, we're going to walk through every single trade I took this challenge, the wins, the losses, and the key trades that pushed me over the finish line. No time to waste, let's get into the video. Cool, so before we dive to the actual trades, we need a framework to base our trades around. And you guys know the trade pyramid. To be a profitable trader, you need 4 core things. You need to know your technicals. You need to know, for example, supply and demand, support and resistance, ICT. I do ICT. You need the data on your trading, journaling, backtesting. You need to have a trade plan, an entry model, risk management, and your mind should be in a good place, your psychology. On this YouTube channel, you see a lot of videos about technicals, so I'm not going to go deep dive into what fair value gaps is, market structure. You can find it all on this channel. For journaling, well, basically this video is a journal entry. So we're going to do this together today. Trade plan, I'm going to talk about it right now. And of course, psychology. I will share my exact thought processes during the trades, during the execution, but also during the trades, because it was not always fun. I will share it as well in this video. Cool. Before we dive to the trades, let's talk about the trade plan. Because I bought a new challenge with Take Profit Trader. I never used this. I saw on Twitter some guys using it and they have daily payouts. So I was like, okay, new profit. How do we approach that? Well, first of all, only buy one challenge, just to test. You want to get funded, get a payout, and see if everything clicks, everything works out. So I bought a 150K challenge. The target was $9,000, and there was a few extra rules. There was a 50% consistency rule, and the consistency rule means that the best day's profit cannot be more than 50% over your total profits. So my target is 9K. That means the best day needs to be below 4,500. There's also a 5-day minimum trading days, and the max drawdown on this account is 5,500. And there's an end of day trailing drawdown. So that means, for example, if I'm in profit for 2K, at the end of the day, that means this max drawdown goes from 144.5 to 146.5 because it's trailing up to 2K. Cool. So based on that, we want to pass the challenge as soon as possible, right? In an ideal world, if we win all of our trades, what would be the minimum days to pass? Well, 2 scenarios here. One is pass in 2 days. That means you need to have a TP of 4,400, 44 something, because you need to go to 9K. You can get that with 1 to 2s, risk 2,200 to get 4,400, or 1 to 3s, 1,500-ish risk to get 4,400. Cool. If you want to take it a little slower, pass in 3 days. And it's ideal, right? Because if you lose, of course, this game plan is going to be a little adjusted. This is an ideal scenario when you win all of your trades. And little spoiler, I did it in 4. Pass in 3 days, well, you need to have 3 days of 3K because you need to go to 9K. You can get that from 1 to 2s with 1,500 risk to get 3, or 1 to 3s, only risking 1K, and then going 1 to 3 towards 3K. So this is the framework we're going to dance around in. And I decided in this challenge to mainly risk 1,500 per trade. I like 1,500 per trade, and on a 150 account, it's just 1%. It was very slow and steady. And now let's talk about the actual entry model. And most of the entry models you see on these channels and also in IST, entry models are reversal models. So there is liquidity being taken out. There's a clear draw on liquidity. You wait for liquidity to be taken out. Then you see displacement, breaking structure. And then in that displacement range, there is an order block created, or a fair value gap, or a breaker, or inversion fair value gap. You know the drill with the IST models by now. And this exact signature in price is what I look for in all my trades. So no fancy stuff, no fancy entry models. It's going to be down to this core principle. So now we have the technicals, we have the trade plan, we are going to journal. So now let's dive into the actual trades to see this exact plan in action. If you want to become profitable as soon as possible, you need to join the thousands of others in the school group, Market Masters. If you go to the classroom in the school group, there's a 5-day getting profitable challenge to make sure you complete that. And after that, there's not only a 5-day challenge, but a complete roadmap course with a step-by-step program on how to become profitable, from the trading pyramid, psychology trade plan, getting funded, entry model, everything is there. And this is not all. Live trading every single week. And on top of that, there's also a Discord. And inside this Discord, there are many other traders crushing it. I share my insights every single day, from outlooks to trade ideas to concepts. So make sure you check it out as well. I will leave the link to that in the description. And now let's get back to the video. Cool. So I bought this account on a Tuesday. So we're going to discuss Tuesday, Wednesday, Thursday, and Friday. And our core trade idea for this week is going to be on the daily time frame, because we see a daily bullish value gap here. So daily internal to external. And this is the external liquidity. This is going to be the drawn liquidity for this week. So ideally, if we look at the open, high, low, close of a week, let's say we have a bullish week. We consolidate. On Tuesday, we go to a discount array, for example, a daily bullish value gap, then break structure, and then trade towards the high of the candle and close there the week. And of course, this candle doesn't look always like this. It can look like this with a big rejection into a key level. But the key is, if there is an internal to external, this is what I'm anticipating. So it means Monday, consolidation or not the move of the week. From Tuesday week or Wednesday, we create a low of the week inside a key level. That's right here. And then market structure shift and then displays higher. Accumulation, manipulate distribution, power of 3. So this is always going to be in the back of our minds during the trade day. Cool. So now let's drop to the lower time frame during the New York Open to see the first trade. So now we're looking at Tuesday just before the New York session. And the New York Open is always going to be the starting point of the trade idea. Sometimes I take a trade before the New York Open, but the majority of my executions are after the New York Open. And you will see also in this batch of trades that trading before the New York Open on Nasdaq or ES or YM is not the highest probability. So here's the New York Open. Let's see what happens after the open. So we want to trade after the red line. And exactly at the open, we get a massive, scary sell-off right here. Cool. This is to induce sellers. People think, oh, well, this was the high of the week, Monday high of the week, and we're now going lower. But we know that we have a daily bullish value gap, and we're going to trade, most likely, a daily internal to external higher. Just to get in all the early sellers and hopefully trap them. And now what we wait for, we're not going to blindly trade into this fair value gap. No, we're going to wait for fair value gaps to be created. And pretty fast, there's already a fair value gap created. And when is it? Around 10. If you know the infamous 10 AM game, you can find on the channel here as well. This is what I like. So here, and we can do this on the 1 minute as well, but let's do it on the 5 minute for this trade. We have a little liquidity sweep here inside a key level. Then we displace higher and we already have a fair value gap here. So the first trade is already taken right here with the TP above this high, stop loss right here for a 1 to 3. This was the first trade of the week. And you might say, why so aggressive? Because it's only one fair value gap. Because I want price to go in this fair value gap and don't chill for here for a long time. I want it to go up to distribute to that internal to external, the green line here, as soon as possible. So I took it. Got a very nice reaction here. And one more thing about the futures prop firm, you need to close your trades at the end of the trading day. You cannot hold overnight. So this was on Tuesday a brutal hold. Why was it a brutal hold? Because we didn't displace. We just chilled. We came back to the entry. And now talking about back to the trader pyramid, about your psychology. Ideally, you want to take a trade and have TP in a few minutes, right? That's ideally what you want. But majority of the time, your trades can be stuck in some form of consolidation or maybe just chills around in your drawdown. And this was an example of this. Took the trade at 10, 20-ish. And for 4 hours, maybe more, the trade just did absolutely nothing. And I needed to close the trade before the end of the day. So I did. So this on Tuesday, we had a very small profit. I closed it here, around here, for only like a $600 profit or something, instead of the $4,500 I wanted. So on Tuesday, not the best start, but this was the trade. So here I took it off. So this trade is now off. It was, I think, around here that I exited right here. Cool. Let's fast forward to the next trading day on Wednesday. So here now we're looking at Wednesday just before the New York Open. And I think Wednesday was the most decisive part in the buys for this week. Because if you see this happening, daily internal to external, but we don't move away from the daily bullish value gap. So the bias is maybe wrong. You remember the psychology game? So I wanted to wait around the New York Open what we did. Was there something that could say to us, maybe we are wrong in our higher time frame buys and we're just going lower. So let's play it out. And here during the open, we already see value gaps being created. Bearish value gap, bearish value gap. Back to the daily bullish value gap. So nothing wrong with this. So let's move it out. And here we start displacing higher. But I was not convinced on this trading day of my buys, my higher time buys. See the mental game? So I was actually more leaning towards bearish because we didn't move away from that bullish value gap. So around 11, I saw this happening. I saw failure swings being left behind. Like I really like this low to target as a short. And I was just basically waiting for some displacement lower, targeting these lows. So right here, I took a very aggressive short right here in this bearish value gap, right here in the 1 minute, targeting these lows as a short idea. Right here, 401 to 2. It was the first trade on Wednesday. And let's see what happened. Gave a little push. But no, completely wrong. Cool. This is a price to pay your tuition money. This loss is awesome. Why? You're like, losing is not awesome? Yes, it was on this day. Because being so wrong on the short idea made me confirm my bias to the long side was indeed correct. Cool. How are we going to move around this? We're going to still continue longing towards the green line, daily internal to external. And the next trade I took on Wednesday was on the 15-minute time frame. And yes, intraday or scalp from the 15 minutes? Yes, because the bias was very, very clear. Let me show you. So look what we have here. We have this loss. We still have the bias, but we're trading intraday and we now created a 15-minute bullish for value gap. If I see this is going to be very easy intraday internal to external. So my next trade idea was towards here, targeting this high. I want this high to be ran. So this was the actual trade idea. And here on the 1 minute, the second I saw this candle being printed is where I got in right here. Stop below this swing low, target this swing high for around a 1 to 2, little below 1 to 2. And let's see what happens. So immediately, this was scary, right? I was like, no, I'm going to be wrong again. It was not very fun. But trust your bias, internal to external. And eventually during the PM session, price starts to move higher. Here again, look at this. And we're going to ignore the TP for now because we're talking about the mental game here. When you see this candle being printed, almost back to the entry, you were in a nice emotional rush. You would think, yes, I'm on top of the world. Trading is the most easy thing in the world. It wasn't because this candle was scary. And then eventually it went to TP. -1, +2, not the best day, but we are in profit. That's nice. So on Monday, we had profits, a very small one. On Tuesday, small profits, but we're still not done. Remember, our target for the week is the daily internal to external. Now let's jump to Thursday to see our next trade. And how did we arrive on Thursday? I want to take you to the 4-hour time frame. We are still inside a daily internal to external. Look at how beautiful this 4-hour bullish value gap is. So the lower time frame trade IDs on Thursday are all based on this 4-hour bullish value gap to hold to then trade back to the highs. This one right here. So on the lower time frame, what I'm actually expecting is price to open at the day, open low in London session or New York, can be already in London session, and then just trade higher. So that means on this day, I took a pre-New York entry because I was open for this London low of today, then trade to the high, 4-hour internal to external inside the daily internal to external. So let's try it. So here we're looking at the London session on Nasdaq, and the yellow box is the 4-hour bullish value gap. So here around 3 is where something interesting happens. This is a very nice signature in price. Remember what I mentioned earlier about the entry model? We see liquidity and then go to the drawn liquidity. This is what you saw here. I was like, hey, interesting. We can perhaps use this. And an order block right here as well, right here. So this was interesting, in my opinion. For value gap, order block with a London low today potentially. So when price comes back there, I'm open to take a trade. Where to? The internal to external daily. Remember, see how the Wednesday high just stopped just below that daily internal to external? That is buy side liquidity, engineered liquidity. We want to target that. Cool. So let's see if we can tap in. That was the first trade on Thursday. We get tapped in right here at 6. So here we are in, right here in the order book value gap. I want to target this high. And I was actually convinced that we're not going to stick around here. So I put here in 1, 2, 3 right here. And let's see what happens. So this is the most nice thing in the world, right? You take a trade and the first thing it does, it just goes straight to your direction until it doesn't. Until it doesn't. But there again, there's another swing high created we can target later. So I took a -1 here as well. So it was a -1. And now we're going to do the exact same thing. Going to wait for a New York open because we took a loss pre-open. It can happen. And now we're going to look for, okay, how can we dance around this during the New York open? We still have the same bias. Very important concept here. We still have the same bias. 4 hour, this big box is a 4 hour bullish value gap. And we still have that green line. We need to target that green line. We don't need to, but it's very obvious that we want to go there. Cool. So zooming out here, where can price, because we were wrong here during the open, where can price potentially sell off to? There are some fair value gaps here with an order block. Let's go to the 50-minute. Here was where my eyes were going. Okay, we have this behind. Inside the 4 hour fair value gap, we also have a small 50-minute fair value gap and order block. Why is this an order block? There's another 15-minute fair value gap here with the order block here. So this area in price, also if you like to use premium discount, swing high, swing low, we could come close to discount as well. So during the open, I was waiting for price to drop lower. Like my bias was still the same. Like if this was the low already, fine. I was just waiting for the first fair value gaps up to then take the trade towards the green line. So let's see what happens during the open. We wait before the open. We're not gonna rush. You wait. So now what we're going to play is a 50-minute bullish fair value gap right here at 10. If you recognize the 10 a.m. game, we open here at 10, we go lower, create structure at the lows, and then go higher. Here is where entry is, right here. So we still have the liquidity resting up there. We're retracing all the way back into that 50-minute bullish fair value gap, getting in early sellers. They're trapped again. And similar trade as the loss taken early in the day. So we're going to target the Asia high right here. That's going to be the target right here. Stop below the low, 413. And it's the trade idea. Same trade idea, so already -1 on the day, but you still have the same bias. From the week, we have a daily internal to external. For this day, we have a 4 hour internal to external. We already tried to catch this in London session, but now we're going to try to catch this with the loss in our head. Mental game. In the New York session, 10 a.m. game. So what do we see here? We see price trades to a key level during a kill zone. It displays upwards. There was also an SMT with ES, if I remember correctly. And then when price trades back into here, inversion for value gap, order block for value gap. Like, it doesn't matter which PD array you like to choose. It was there. I like to use for value gaps and order blocks. And now let's see what price gives us. And because we already engineered so much liquidity, we don't need to chill around for a long time. So after a while, we are approaching the lunch retracement here. And then during the PM session, price went to TP right here at 115. 1-3. Let's go. Our first 1-3 on the week. And that's cool because that's raked in a nice profit. So +3, -1, that means +2 for Thursday. And now let's drop to the Friday where we're going to bring this challenge, the 9K, home. And again, with the exact same loss taken before New York session. Let me show you. Cool. So now we're looking at Friday at the 4 hour time frame. And we already completed the 4 hour internal to external on the trade on Wednesday. And we also are already in the weekly target, the daily high here, the daily internal to external, we already completed on Thursday. So then the bias for Friday is kind of neutral because we already completed the target, but there's still probably some movement left in the tank. So I want to show up and see, can I get that exact same move? And what's the move? Well, I want to long. I'm bullish on Nasdaq in higher time frame, so I want to see this happening in London and New York. Ideally New York, but here again on Friday, London session, it happened again. It happened again. Cool. Let's drop to the lower time frame right here. So what did I saw happening? We took some short-term liquidity, and yes, this is not a good liquidity pool, so this is a mistake from my part. I took a B setup. Here is lunch low. Here is PM low. But this signature in price is what I like to see. Liquidity sweep, mark structure shift with a fair value gap, and these down close candles that swept the low is an order block. So here is where I already want to get in, right here. So target the highs, take a target at this high, this swing high for 1 to 2. And I was like, well, if we gonna sweep the London low, I may be safe as well. And now let's fast forward. Took the trade in the London session, 4:30. Well, it's already a little spoiler. But during our best friend, the New York Open, price started to move. And spoiler, it wasn't in our direction. Right here, it got stopped out. Either way, we got stopped out. And that's fine because the target is going to be the same right here. So then with that -1 again in the back of our mind, we still can trade towards the drawn liquidity that is going to be the Thursday high, or ideally this swing high. It doesn't really matter which high you pick here. And I needed a 1, 2, 3 to pass the challenge. So it was a little dangerous. Let me show you what I mean with dangerous. And to do that, I want to go to the actual executions. This is my execution time. This is my live chart. I want to recreate it with a clean chart. But it's the actual chart, what I traded on this week. And I want to bring you to this. So this is what I was doing. And everything I do here, guys, is live on stream with my students. And I want to show you what happened. So I got stopped out here. I was joking during New York Open. Like I didn't get stopped out by 1 point here. I was like, I had the magic stop loss. Well, obviously I didn't. And here is where the entry is. So we have an SMT with ES. And we also took that PM low right here, or the lunch low. And then the same structure, liquidity sweep, aggressive sells, aggressive buys, and this fair value gap with the order block exactly here to the pip. I took the entry. Stop quite big, but I needed the 1 to 3 or 1 to 2, 9, 3. This was my TP. But remember, the high was already here. So the original target was the green line right here. Already hit at lunch. But to pass the challenge, I needed the extra mile. And if you've seen the standard deviation video in the YouTube mentorship, the manipulation leg, swing high, swing low, and then you trade to the -2. That's what I did. See how the high of the day is formed? The high of the week actually is exactly the -2. So I did that, and my TP was below the -2, so I was good to hold. I was confident to hold, and I eventually just chilled, and it went in the lunch before the PM session already went to TP. And that was it. 9K in the pocket. Trading on Tuesday, Wednesday, Thursday, and Friday. Exactly the same model. Took multiple losses, but executing the same exact model every single day. The consistency with a clear execution framework and a risk management framework will actually pass you every challenge you want. That is it. 9K, 150K added to the funded war chest. Hope you enjoyed. If you got value out of this, like, subscribe, comment what was your biggest takeaway about this, and make sure you send this to a friend who absolutely needs this. I know you have friends who blow all their challenges. So make sure you send them this exact framework. You can just copy this and do this yourself. I'm going to do exactly the same next week. If you want to see this, I'm sharing my outlooks in my Discord. Also, there's a lot of it in my school group. Links in the description. Join now, and I'll see you in the next one.